For more on the markets, let's bring in Mona Mahajan. She's Senior Investment Strategist at Edward Jones and JJ Kinahan, IG North American CEO. And Mona, I'm going to start with you and then get to JJ and then ask him whether a non-capitulation with the VIX means this is still just part of a trading range. But I'll ask you that first, Mona. If you've missed, let's say, the NASDAQ 32%, you buy now, or do you expect it to be in a trading range in both the NASDAQ and maybe the S&P as well?
Yeah, thanks, Joe. Look, this has certainly been a stellar first half of the year. The S&P is up over 14%. And historically, when the S&P does start up over 10% in the first half of the year, that does bode well for the second half of the year. Now, investors have had some reasons for optimism. Economic data has held up better than expected. Inflation continues to show signs of moderation. And even the Fed, while they've told us they may have one or two hikes left, we're certainly closer to the end than we are to the beginning. So we do think it's a good backdrop, and we're seeing markets participate accordingly. We're starting to see a little bit of broadening of participation, areas like industrials, materials, so typical cyclical sectors, and even small caps, which tend to lead on the way up, are starting to show signs of life again. Now, we'd be cautious to extrapolate the strong first half to a straight line higher in the second half. We would expect bouts of volatility, especially if we do get some cooling in economic growth, which some of the signals are pointing to. But certainly we'd use those periods of volatility as opportunities to position. We think for a broader based rally in equities, and even in the fixed income space, we think bonds are starting to look attractive, especially ahead of a potential Fed pivot in 2024.
Well, Mona, as usual, if the economy cools, you don't know whether that's bullish or bearish, right? You would think that for earnings it would be bearish, but for the Fed it would be bullish. So it's all bass backwards. You got to figure out what's most important. Let me get to JJ. So JJ, if we're in a new bull market and the S&P adds to its gains, are we able to do that without the VIX having made a capitulation bottom by trading at 30 or 40? I mean, has that happened before? Could it happen because it was so spread out that we made this really long sort of a saucer bottom instead of a V bottom? Is that possible?
It could happen, Joe. It's so interesting. You know, this is the rally that nobody's happy. It's really so interesting. We continue to go higher, and everyone is just continuing to be worried. And so those are usually the type of rallies that can continue longer than you think. That all said, the VIX has been really got beaten up there at the end of May, early June, has kind of stayed down. But I think as we head into earnings, which, we have employment this week, then we start earnings a week from Friday, I think that you are probably going to see the VIX start to tick back up because there still remains a lot of questions. Although, the banks kick us off. We still have this strange 2-year, 10-year relationship in terms of rates. And so that's going to make it more difficult for banks to really kill it, so to speak. We continue to get earnings that are good, but they beat these very low expectations. So as long as people are hesitant, and we see that through our Tasty Trade client activity, and I think we're seeing that throughout the market, people are hesitant to be all in. As long as people continue to be hesitant, we can actually continue to go a bit higher, Joe. And I think we can go higher with the VIX sort of creeping back to that 17 to 20 level, I should say, because we're almost near 15 right now again. But again, I just find it really interesting. As you said, bass backwards, I believe is the wording you just used. That's kind of exactly where we're at, until we get some clarity out of the Fed. And, everyone who was calling for us to have rate cuts by the end of the year, if you look out to December expectations, we're still at about a 60% probability of a rate hike.
I didn't even know there was something besides bass backwards, but I guess the other one you can't say, can you, Courtney?
It's cable.
Well, you can, but you just might be in trouble.
So I keep forgetting you're a Tasty Trade. Why don't you ever send any of those crumpets over?
Joe, when I come out there next time, I'm bringing some for you.
Thank you. Mona, the Magnificent Seven, is that good or bad? Does everyone catch up with them, or is it sort of got us all thinking the markets are up when the average stock really isn't up that much?
Yeah, look, when we started the year and there was this very narrow leadership, especially in that second quarter, where was this Magnificent Seven trade, we didn't think that was necessarily a healthy sign. When the rest of the 493 stocks in the S&P 500 are trading flat to down, while 7 are up 30 to 40%. Really, we'd like to see a broadening of participation. But that broadening of participation, we think, only happens when the economy does reemerge from any potential cooling and goes into a recovery mode. And that recovery phase does tend to show, leadership in areas that do include cyclicals, small caps, international. So we do think that a healthier sign for the market would be a broadening of participation. Now, keep in mind, if that Magnificent Seven, there's any sort of pullback, consolidation, if there's some profit taking around it and the rest of the market doesn't catch up, that's really where we could get our pullback in the market broadly. And so that's what we'd be watching for. If we do see a pullback in the second half of the year, we think it's because the seven slow down and the rest of the market doesn't catch up. But we think as we emerge into 2024, we'll see that broadening of participation. And that's where you want to be positioned for.
In 10 seconds, JJ, you think we broaden out, or do you think that is an indication that, something's amiss?
Well, I think Mona's right. We need to see what we've started to see over the last couple of weeks, Joe, is some of the energy stocks, which I find really interesting. Our clients going toward those, the Occidentals, the Exxon Mobils of the world. So if we can catch some fire, if you will, in sectors that have been a bit beaten up, then I would agree with Mona that we can continue higher. I think it's going to be hard to do, though, in the shorter term through earnings.